Ravi Muthukrishnan, Co-Head Research with ICICI Securities. Ravi, good morning and thank you for joining us. This is your first time on ET Now, so a very warm welcome and thank you for joining us.
Good morning. Thank you.
Ravi, if I map the current market environment, at least it appears to me that in the short term markets are pricing in best of everything. The markets are pricing in that earnings will go up, rates will come down and inflation will remain static.
First of all, if you see from the earnings perspective, FY15 earnings, there seems to be a slight uptick. And you see in terms of upgrades, what you see is both in the large cap and the mid cap space, the percentage of upgrades have actually gone up, which fundamentally seems to be okay with some of the companies. Inflation is likely to come down, primarily because of vegetable. But the two pain points could be in terms of core inflation, where the rupee depreciation has not even passed through some of the import items. We can also see a bit of suppressed inflation coming in fuel prices. So net-net, if you look at inflation, my guess is it will fall to around 7%, which is good, but I feel that the RBI governor would be slightly more cautious and will ensure that the repo rates remain unchanged. As regards the IIP number, a bit of a disappointment though, and that primarily because of manufacturing and primarily because again of consumption. What we think is that this number will have some sort of an impact on the GDP numbers moving forward. We had an expectation of about 4.8% for FY14. But then it now appears that 4.8 may not happen. It might be slightly lesser than that. Now, as regards your CPI number, again, we have seen that the CPI number, the headline number has fallen, but the core number has slightly inched up. So net-net, from the macro perspective, you have some pluses, some minuses. CAD numbers look very good because of the trade numbers coming in last week. We expect CAD to fall further. We initially estimated about 52 billion. Now it will come down to about 40 billion. Fiscal deficit, we think the central government will ensure that it remains at 4.8%. But we need to see as to how that pans out moving forward once the elections are over. But the big game changer for the economy would be in terms of the elections. If you get a stable government, things can move faster. If you get a unstable government, things can go haywire. Likewise, if a stable government with the good policies on infrastructure, you could expect an uptick in cap goods and infrastructure. But if you have a government which is more keen on social spending, then you might again see investment growth not happening very quickly in the near future. So from India, there are pluses, minuses. The good thing for us is the global economy is slightly improving, especially the US and Europe, which is good for the IT and the pharma sector. That's the reason why our top picks have been largely in the IT and the pharma space. So if you talk in terms of what our Nifty expectations are, we expect because of the uptick in earnings, our numbers are about 489 as against the street number of 495. So if you purely base it on that number and the risk associated with that number, we expect Nifty to touch about 6,500. But there could be a plus or minus here. So we say the range is 6,000 to 6,700 because the news flows can take it either way. So what is that we have to watch out for is the elections, the global policies, inflation, for example, that again can decide either way. And then, of course, as to how quick the investment cycle will revive.
So Ravi, just getting back to the point that you just made, that you do see inflation actually cooling off. Does that also follow an assumption that it is going to be a status quo policy from the RBI this month?
Yeah. So for this month, it is going to be status quo. But like I said before, your food inflation may come down. We think that 7.5 last month we have peaked out on inflation. It will come down. Our FY14 estimate is about 6.8%. But what I think is that there will be a potential 25 bips increase in the repo rates, but not now, maybe in the next couple of months.
Your top pick for 2014 is Infosys. What makes you bullish on Infosys? Because there is still no evidence that the business has turned around for better for that company.
We like Infosys for the simple reason that most of the earnings expectations are still not in the price. You see, this quarter we have seen some surprise in terms of revenues. We have seen some surprise in terms of earnings. The management has moved from being cautiously optimistic to talking in terms of firm improvements. The revenue growth numbers are pretty good. So there are two things which can go Infosys' way. One is the earning numbers can surprise in the near term, and you could potentially also see a re-rating in that stock. So we have a target price of about 4,065, which is 10% upside from the current levels.
Just want to mark what the Nifty is up to, because we've had a gap up start and we've gone above yesterday's highs as well. The Nifty will just come off you on your screen, 62.82, so good going. 62.72 thereabouts is the last high that we clocked. 62.85 now, and if we actually go on with this rate, it seems like 6,300 could be here as well very soon. And seems like this is turning out to be a bullish day, of course, with the assumption that these gains actually maintain and hold for themselves. But Ravi, you just talked about as to how you're bullish on the IT sector. Is that view restricted to the large caps, or do you think mid caps as well, as they already have, will continue to move up the value chain?
Not all the mid cap space. We have a positive view on some of the mid cap stocks, but by and large we are positive on Infi and Wipro. The way we look at it is, where is the maximum delta going to come from? So we see that these two stocks, we see a maximum delta coming in.
Now, whereas you expect that Nifty could give at best 7-8% return for 2014 as a house, you're not bullish, but you're extremely bullish on Reliance, and your target price for Reliance is 11.20. By far, this is the most bullish target on the street. What are you betting on? Gas prices moving up, petrochemical demand coming back?
Two things we have seen in the case of Reliance Industries. One is, they're doing a huge amount of capex, which will sort of give them benefits in the future. As I said before, this report is not about the current, but it's about the long term. So this capex should fructify in the future. That is one main reason why we thought Reliance is a good bet. The gas price hike should be beneficial for the company if there's a gas hoarding issue takes a backseat in the future. The GRMs, which have been bad last quarter, seems to be improving now. In the last couple of days, we have seen the GRMs improving. So net we see that because of the investments and because of the gas price hike, though of course that is not a major chunk of their business, but potentially in the future, that should give them substantial benefits.
What makes you bullish on Bajaj Auto? Again, you got a fairly steep price target there, about 2,400.
Yeah, Bajaj, we are extremely bullish for the simple reason that 42% of the business comes from exports. Now, of course, the problem for them is the domestic business, like every other auto company, is not doing so great. But the export business of late in the last quarter has picked up very well. They have done a 15% growth in that business. And on top of that, they've come out with their quadricycles now, which may have an incremental impact on their earnings moving forward. We're not very, what should I say, not very convinced with the domestic stories, for the simple reason that we still haven't seen the economic indicators showing any sort of revival, which is a main, like I say, main driver of growth in the domestic business. And on top of that, we thought that the rural consumption and rural growth would bring in a pickup in most of these companies, but that also seems to be not happening in a rapid pace. So for us, when we talk about auto, we're only talking about autos with an international footprint. So in that list, we also have Tata Motors.
Ravi, you just talked about being selective in mid-caps. You guys too are bullish on names like VST Industries, Shriram Transport Finance, Sri Cement, etc. Is this a long-term view on these stocks from a 1 year or above time frame?
Yeah.
And at the current juncture, do these remain good buys?
Yeah. See, when we talk about mid caps, if you look at the history of the last 9 years and do an analysis, what you realize is that FY12 mid caps did exceedingly well, outperformed large caps. They generated 23% return. FY13 we saw large caps doing better than mid caps. This year we think the mid caps will do well because over a last 9-year period they have always played a catch-up game. So it's 1 year of large cap, 1 year of mid cap. So this year is the turn of mid caps. 3 reasons why we like mid caps is that, as of today there is a 20% discount between the large caps and mid caps. And if you see the mid cap space closely, you see for most of the mid cap stocks the earning upgrades have been happening. So taking that into view, we said that we are happy to look at quality mid-cap stocks. Quality mid-cap stocks for us are stocks with sustainable growth, high ROE numbers, and with a strong balance sheet. So from that context, if you see, all these stocks have that in place, plus the fact that their returns are going to be substantial. That is what made us look at VST as a company. Purely cigarette business. And with what you see in ITC, with price hikes happening in ITC, you could also ensure that happens with VST as well. Pidilite is a fantastic brand. It is one of those companies which you can play in this downturn. Fantastic brand recall is very huge. One of the very few companies in that space. Shriram Transport, again, we thought that they're doing very well in the secondary equipment and commercial vehicle space. And the fourth company we looked at is Shree Cement, because they have put a lot of expansion plans in place. They have done consistently well in terms of their growth in the last couple of quarters. It's in fact their growth have been higher than the industry growth. So which is why we thought these 4 stocks look very good for us. So they are more of a long-term bet. We think that they will be able to ensure their performance in the long term.
But Ravi, the stocks which you like from the mid-cap space, let me just challenge your thesis. Point number 1, names like Pidilite, Dabur and VST have seen 2 or 3 years of extraordinary return. Yes. B, they are not very cheap as well.
Right.
At a time when markets are really looking at buying or revisiting value, picks in the mid-cap space, does it make sense to buy some of these performing mid-cap stocks?
It's not about the price. We think they are high quality stocks. So I think the price still don't take into account the excellent quality we see in these stocks. For example, when we say price, we have to look at it from the context of what the ROE numbers are. So companies with fantastic ROE should ideally be able to get more price in the future. So we think there's still an upside to the prices they have today. Dabur is a good story because of the fact that the international business is doing well. Their, what should I say, the rural reach has been tremendous. And I think, for them also the upsides are pretty huge.
So the bias of your portfolio is to bet on exports because you like pharma, you like export-oriented autos, you're bullish on IT. So you're not betting on a domestic revival, and the only sector you like when it comes to the domestic story is cement.
Yeah, cement because of 2 reasons. One, we see their rural growth may pick up because of the Rabi season as well. Kharif has been good, Rabi can be good, so that could prop up rural demand, especially for rural housing. We feel that there could be some amount of capex or some amount of infrastructure spends before the election, because most of their constituencies, their representatives will have certain funds which they will spend on small roads and things like that. So there is a bit of spending which can happen, and these 2 companies are the best companies which have capacities in place to take over the next phase of demand. If you go back to when we said exports, we said that we're not talking about sectors here, we're talking about a theme. So we said export theme will do well. The second theme which we said it will do well is the easing regulation. That's the reason why we chose to talk about the oil and gas companies, and we also chose to talk about, say, telecom. About the infrastructure space and cap goods, we are not betting too much on the outcome. We're not taking speculative calls there. See, anything can happen in this election. We're still not sure as to where it's going to head. Like I said before, a stable government and a focus on infrastructure spending is the key for cap goods and the infra space to move up. That to me at this juncture looks slightly more,
Right.
hazy.
Okay.